Okay, jet setters. Just a quick weekly wrap on S&P. This is the futures. I always find it amusing when some people say, "Oh, we've got to look at the cash. It's the real market, mate." The real market is actually the futures as well. It is a market. It trades. Would you believe it? And if you're just trading the cash market, you're only there for like a third of the day. A lot of stuff happens in the cash market, of course, but a lot of stuff, a lot of signals happen overnight. You can trust me on that one. Having worked in the industry for like over 20 years, run books. It's a 24-hour proposition when you're running a trading book, right? So to just say it's a cash proposition, you're delusional. You're delusional, right? And if nothing else, you can end up, particularly if you're running overnight risk, running gapping risk, right? Which we've kind of seen, right? You can see on the cash, in the cash market, right? If you're running overnight positions in the cash market, you're running like, you're kind of running like some pretty, look at all these gaps, right? They're kind of everywhere, right? You've got this gapping risk all over the place, these ones, everywhere, right? You're running gapping risk all the time. If you're just in the cash market running overnight positions and you don't understand gapping risk, you shouldn't be doing it. Particularly if you're trading, trading on a frequent basis. Whereas you look in the futures market, where are the gaps, right? It's a tiny one here. You've really got to be careful of the gaps in the futures, right? There's not even really, there's a tiny little one there, but you know where the other one is? You're right, up here. This little stupid little piece in the way, right? It's look at that gap. That's a really significant gap, and that, my friend, is in the futures, right? So if you're ignoring the futures and just saying focus on the cash, get a grip, right? So here we go. This is the futures. That level here, that's the gap that I think is a reasonable chance to get filled. Well, I guess not reasonable chance. If this market breaks down below here, then I'd say it's very high probability, or certainly significantly more. You can see here how it's kind of rallied back and filled the gap, very much to be expected. That's what these things do. And it's kind of stalled at this previous low here as it has stepped down. Let's go down. Let's have a look at this, hey? Yeah, so it had a bit of this like little double bottom here, but it has obeyed like this, this kind of previous low here that it really struggled to get through. It had a bit of a lash, but it didn't follow through. And similar to the Aussie market, at least, it kind of stalled at that 61 retracement level. Pretty deep, but, standard. Follow similar behavior and just kind of stepping down. Lows, comes back to that previous thing. Lows, comes back, comes down here, hit this pocket in here where it's struggling. It's still, the jury still is out, right? I'm square. I don't have any positions in the US market here. I've just got my chips on the table in the Aussie market, but you can see here the US market, it is due for a little pullback on this leg. That is heavily overbought. It can go a lot further, but a few of those planets, including hitting this resistance here, sitting in this pocket here, having turned, reasonable chance for it to go lower. This is a bit of a target here to watch it, to see what happens as it goes down here. I guess probably that's another one, that 43.90, but I suspect it's going to be weaker rather than stronger. Let's see if there's anything interesting happening in the pretend market, otherwise known as the cash market. If you only run risk 30% of the time, then why not? Look at all those gaps. Oh, why would you? I said intraday trading, sure. Running overnight positions. I said I've run option books, and gapping risk is not a fun thing. And in those books, the gapping risk is, in that like 30 to 45 minute window, twice a day as the futures market closes. That's the gapping risk, right? That professional traders run, and I used to run, not 16-hour gapping risk. The key level here, which it would need to break to really kind of say, hey, look, this is just this is just selling on the back of the old, the 17th and 18th seller is here. That will be the higher. They'll, as soon as it's gone the high, the low, the high, the low, that they're folding down. If it breaks there, then I'd say it'd be quite a different story. It'd probably wipe out my kind of short-term bearishness view for sure. These are some levels to look at there, that kind of 4,400. Obviously that 43.30 if you're talking the cash level. That's another big one there, 42.40. If it gets down there, I think there's a really good chance of it getting there, subject to here. And I guess that's where the risk reward is. I kind of think, you kind of dust like a few points here from 44.50 up to 44.80. 40 points. Like what's that between friends? A spill out the bar on a Friday night. Compared to from 44.40, that's like 120. All right. That one is like 200. Down here is like 400 or whatever. So the risk reward for me is really being short, a little stop above here, looking for moves down there. That's like 50. That's 43.90, 43.30, 42.50, and so on. I guess the odds of this obviously just increase as it starts testing these levels, but it has made a new low there, although it's the gap's been filled. It hasn't filled it that convincingly, and I think we watch that and we'll see what happens. Anyway, that's all. Catch you later.